All
Dude,
right.
I need Derek Oliver. I need him to talk right now and share his fucking win. Stop sitting back there and like being nah, come on, man. What's that big win you just had?
Bro, let's hear it.
Oh man, we had three fourplexes in Washington. We were able to wholesale one. We made 92,000 off that, and then we bought the other two for 1.4 million. Held them for 30 days, listed them on the MLS, and sold them for 1,015,000 a piece. Pretty nice spread.
Let's go.
Dude, a year ago, this guy was just starting out, like 18 months ago. He quit his full-time job. I mean, dude, this guy, I'm just so proud of you, bro. Seriously, man.
Thanks, brother.
So are you going to be
Appreciate
my
it.
private money lender now?
Let's go.
Mr. Camacho, good to see you, sir.
Hey, what's up, Will?
How's the weather down there?
It's actually warm. I'm down here in Guadalajara, Mexico, and it's been about a day since I've been here, and I'm super happy to connect with some family, and also gonna do some work while I'm down here. Maybe interview a couple potential virtual assistants, and then head back to LA next week.
Awesome, man. I know it's the jet set lifestyle, right? The Alex Camacho lifestyle.
Man, yeah, you know how important lifestyle design is for me. It's important that we not only are designing the life we want, but continually to step it up and push yourself past your self-limiting beliefs, past your boundaries. The more you travel, the more you get around, the more that you get better at doing it. With anything, it's a skill. I can pack faster. It's less stressful for me to go to airports, and I like the adventure. But everybody's different. To each his own, as they say.
And again, for those of you guys that are just tuning in, Alex is down in Guadalajara, Mexico. So he took off here from Los Angeles, is down there visiting with some family, some friends down there, and making some new acquaintances as well. So as we do welcome everybody else back to the webinar, go ahead and feel free to use the chat down below. We're going to go ahead and love to hear where you guys are tuning in from, where you guys are currently investing. That way we can all kind of tune in and help out if there's something that we can do in your area to help you. Also, we do want to go ahead and let you guys know to use the chat feature today. In addition to that, we're going to use the Q&A feature. So if you guys do have any questions about JV agreements, joint venture agreements, that's the topic of the day. Alex is excited to kind of dive in with you guys on that. And we'll just do a quick kind of update. Again, Alex is down in Guadalajara. He's kind of looking around for some new VAs and meeting up with family. And give us a little business update as well, Alex. What's kind of going on with business for you, right?
Well, yeah, first, I just want to say what's up to all my deal makers, right, that are tuning in today. Thank you guys for your time. We know it's really valuable. I'm excited about this webinar because joint venture partnerships, they have helped me out tremendously in my career in real estate investing. I've done quite a few. I've seen the good, the bad, the ugly, and I'm just excited to share with you guys everything that we can on this hour, so you guys can learn from my mistakes, but also learn from my wins and hopefully do some of the same. Last week, my mother said she was going to be coming over to Guadalajara to see one of our favorite aunts. She's kind of a matriarch of the family. So I haven't been down here since October of last year before I moved to Hawaii. So any chance I get, any way I can come down here to Mexico, I make it a point to do it if I can. And we have 3 virtual assistants currently working with us, and they're all in Mexico. I know people have virtual assistants from all over the world, Philippines and South America, but I'll say I lean towards Mexico simply because it gives me an excuse to potentially be down here with family as well. So again, that's, lifestyle, business, design, right? And so left on Monday night, Tuesday morning, afternoon. Last week, we finalized our Paramount flip. So I think we recorded on Monday. So now that one's kind of good and done. We're going to be talking about that a little bit as well. And then we also closed on our Joshua Tree joint venture deal, which is also super exciting because at the first time we're investing out there. And then a lot of great things are happening in Hawaii. We're getting some additional leads from the direct mail that we've been sending out. So it's just busy, man. I'm on Zoom calls all day long, and then I'm gonna go eat some tacos or something, and then kind of get back to it.
Well, awesome, man. Quick shout out. Just wanted to shout out everybody who's using the chat feature. What up, Ulysses? Nick Mobley, Andy Rodas. I see you guys. And, a big thank you to everybody who's tuning in from out of town and out of state as well. I see Derek Oliver up in Washington, Sean Pace out in Denver, obviously Camo High out there in Hawaii on the islands with Hazel and Zaylin, a couple other Hawaii folks. But again, just great to see Nathan tuning in from Seattle. I see Stacy from Hawaii, bunch of people tuning in now. And it's cool to see, the vibe of the tribe just continue to grow as people start to, realize like, hey, this is really an experienced investor, Alex here, who's kind of diving in and really opening up the books for you guys. So can't wait to dive in today. What we're talking about is something that's come up in a lot of the questions that you guys are submitting online on the webinar. And so we wanted to talk about JV agreements. So Alex, start us off. What even is a JV agreement? Like, what is that? What do people mean when they say that term?
It's a simple definition is joint venture agreement. It's when you structure a deal and there's two parties. Usually there's one that's a deal provider, someone that's bringing in the deal, and then there's somebody that's usually funding the deal, the cash provider. But we're going to be talking about a hybrid of all that, percentages, responsibilities. So, but the simple version really is that you split responsibilities. You bring in something, you each bringing something to the table, and then instead of doing a traditional wholesale or fix and flip, you are just doing a joint venture on that deal together. That might be a rental, that might be a flip. More times than not for us, it's been a flip, but we're also starting to consider doing some other rental properties, such as with our partner out there in Antelope Valley, Paul. But yeah, that's a simple version, man. Split responsibilities and you do a joint venture together and then split profits.
And like you said, pretty simple, right? There's a splitting of the profits. There's a splitting of the responsibilities, and more times than not, somebody's going to bring together the deal, and the deal finder is what we kind of call that, and then somebody's going to bring together the cash finder there. So again, what we're talking about today, guys, is the joint venture agreements, and that kind of brings us to our next question, Alex, is when or why would I use a JV agreement? Like, where would that make sense?
Yeah, so I believe it's a choice. It's just another option that an investor has. I mean, you don't have to do that on every deal. I certainly don't. We don't. But it's definitely something that you need to add to your tool belt as an investor. But it also my experience is that it depends on the deal itself, whether that makes sense for you to do a joint venture. And we'll be talking in more detail about that in the rest of the webinar. If maybe you don't want to wholesale something, has a bigger spread, and maybe you want to kind of see that deal through. Maybe during your current pipeline or whatnot, you just don't have enough capital, and so you bring on somebody. I know we've done that for that reason in the past as well, where we traditionally find certain opportunities that we don't wholesale much. So when we don't, we do joint ventures often too, depending on the deal. So I think it just has to make sense for the deal, but it is something that's just an option choice that people should consider, especially at the beginning parts of their career, because some of my earlier deals turned out to be real big wins, which propelled my career forward expeditiously. So I just want other people to be able to kind of reap the rewards on that as well.
Great. And again, I think JV agreements are right for some people. They're, right at some times for some people. But I think that's the big one you mentioned right there, is that you're both going to grow your wealth and your skills if the JV agreement is done correctly.
Yeah,
right?
and I forgot to mention something, Will. It also helps strengthen relationships, because if you do a successful joint venture, then you have a proven track record with helping each other out, and you can do another deal after that with more confidence, more trust, and faster, because all that trust is there.
Yeah, I mean, we talk about that with agents, right? It's almost like you're doing a joint venture with the agent. You're saying, hey, I want to work with you. You want to work with us. If we can work together again, and you bring deals to the table as an agent, and we take down those deals and everybody gets paid, we call that abundance mindset, where people want to continue doing business with you because of that. So let's talk about the structure a little bit more, Alex. Like, how would you go about structuring one of these JV agreements? What's the starting point? What's kind of the average per se, right?
Right. So I think it can be a equity percentage split, I mean, it can be as low as 10% to 90%, you know, right? 10, you're only, say you're just bringing somebody a lead, right? It's just a motivated seller. You don't have it under contract. It's just, you need help. You're starting out. Then, you know, you could retain maybe 10% of the equity of the property and say, you know, things projected to make 50 to 100 grand. I mean, you could have something and you would have a percentage of the equity. So it would allow you to learn it through the entire transaction. All the way up to like a 50-50 split where let's say you got a monster deal and, you know, you have it under contract and you have it in escrow, but you just don't have the funding for it, can't get the hard money or whatnot, then perhaps that would be a way of structuring the deal as well, where you split it 50-50, you bring the deal, the other partner brings the money and funds it, and you guys split responsibilities based on your skill set, and then you know, divide that profit up at the end 50-50. So I think it just depends on, I like to look at things kind of like a pie, right? There's like a pie and there's all these, how much of that slice of the pie you deserve is based on what you're bringing to the table, but also what you negotiate. And as you get more valuable as a deal maker, you can negotiate from a stronger place and demand a higher premium. Like, you know, I don't typically do that many joint ventures anymore, but I did it for a long time and I'll do it on occasion. But, you know, it just depends where you're coming from. But I think it's a valuable tool, once again, in your arsenal as an investor.
Great info there, Alex. Again, I think you keep mentioning that the tools, you know, the tool belt, it's not like you have to do every deal like this, but it's just a great tool to have in the belt. If something makes sense, if you can learn, if you can grow your wealth, if you can grow your skills, if everybody can, and you can grow the relationships, like, you know, it might make sense to go ahead and jump into that agreement. But what about for somebody who's like currently wholesaling? If they're wholesaling, what would make somebody, you know, consider doing a JV agreement with a more experienced investor?
I think the main thing about that question is when you're a wholesaler, you're kind of a one-trick pony, and wholesaling is a little bit more difficult these days because a lot of people are opting to do flipping instead, simply because you can make so much with the market being where it's at, as hot. You know, right now we're in May of 2021, and I mean this doesn't seem to be ended with end to the low rates and low inventory. So I think it would be that's just one strategy. And then, so if you're adding that other technique, that other way of doing things, then you're becoming a better investor. And so I hope that's the goal. You know, if you're a wholesaler, but then you do a joint venture, you could learn the rehab, you could learn, you know, what you go through when you resell the property, just a bunch of other stuff that you can learn and become a stronger investor and add that additional strategy to your business. And then, for example, like we're looking to do joint ventures right now on ground up and new development construction. Like, so I haven't done that before, but I know a friend of mine is building a custom home in a very expensive part of the San Fernando Valley. And I'm interested in maybe doing a joint venture with him because he's already doing it. I don't want to make the mistakes if he's already gone through it. And so has his builder. So imagine the wealth of knowledge I can learn by partnering with them, and then just not forfeiting, but waiting to get paid. Having that patience and saying, hey, you know, I'm going to do this long term. So, and then also, there's a lot of property torn down in Los Angeles, and, you know, with the proper zoning, you can build out, you know, more units and townhomes and things like that. So, but again, we haven't done that yet. So I lean towards partnering up with people and doing a joint venture. And as far as the equity split and all that, I'd probably be like 15 to 25%. I'd retain that much of the equity, and then they would do the rest of the work, and I would just be a fly on the wall. So we could learn that additional strategy and continue to add things to our investment company. You know, what options we have and the way we make money.
And I just want to, you know, point out something on that real quick here, guys. Alex just said that, you know, for him to take a stab at something that he doesn't know how to do yet, this is an experienced investor that said he'd be willing to take, you know, a 15% share in something where he brought the deal and got to learn from somebody. So, you know, the percentages don't really always matter that much. It's when do you want to get paid and what's the justification? Are you looking for just the money, or are you looking for the knowledge? And sometimes that knowledge is more important than the money, I think. Would you agree, Alex?
Yeah, of course. And then I'd like to add that you guys have to keep in mind that sometimes you can negotiate an acquisitions fee kind of, or a part of your equity up front, so that way you can keep your marketing going. So say you're wholesaling deal, you would wholesale and make 20 grand, but you can JV and make 40, 45, and then maybe you get 10,000 up front as an acquisition, kind of part of your fee to keep the marketing going. Because oftentimes we want that payday, but we only need something else to keep the business moving, to get the next deal too. So that's what I did with my Maui deal, because I did a joint venture on that one, and I retained I negotiated in the deal a $20,000 part of my equity up front, so that I can keep doing marketing in that, and not have to go into my savings or into my business reserves.
And guys, we're going to go over a joint venture agreement, and we're going to go over a profits share agreement here, right after this, just so you guys can, again, kind of get an idea of what Alex is talking about when he's kind of giving these numbers and terms. In the meantime, if anybody has any questions, go ahead and use that Q&A feature down there at the bottom. Let us know if you guys do have any questions about anything we've gone over so far about joint ventures. And then in the meantime, Mr. Camacho, if you want to go ahead and give us an update on a joint venture agreement that you've done in the past. Like, what was a good JV agreement that you maybe just finished up on?
Of course. One of them that we just finished on was Paramount. That was a duplex flip that I did with my broker and partner, Moises. He is an active investor, a broker, lender. And when I brought him the deal, I was just flipping my primary residence. I decided to sell my primary residence after being there for 16 months to cash out and get more liquidity and go all in. And I literally was 2 weeks away from closing. I would have had the capital to do this deal, but because it was a heavy rehab and it required, almost 100,000 in rehab plus the down payment of like 80. So it was going to tie up close to $200,000. And I just felt it would be a better idea for me to do a joint venture. It was an MLS deal, and it was difficult for me to wholesale in the time frame that we needed to close. So I just decided to bring in Moises. Now, we had already talked about doing deals in the past, but we never did one. He had helped me as a listing agent on a couple of my deals. So what ended up happening was he found the private financing. He did most of the project management, and he sold the property, and then we split the proceeds 50-50. Now, everything that could go wrong with that deal kind of did, with the time frame, the city involvement and whatnot. However, we did end up still making a profit of somewhere north of $130,000. So when you think about that, we bought the property back in like September. So that's 9 months or so that we held that property, and then we each made $65,000 or so. That's a pretty good ROI. That's $7,000-8,000 every single month that we were making on that property. So it's a win-win, 50-50. And I only had to use $12,000 of my money to lock up the deal, the deposit. And then I ended up getting that back when we closed we bought the property, when we actually closed and acquired it. So I really had no money into the deal, and I still made $65,000.
So, again, that's an example of where a joint venture agreement worked out for you well. You didn't have the cash, but you had the deal, and you were able to work with somebody that you've worked with in the past and kind of strengthen that relationship. So it sounds like that was kind of what you were talking about, how you can do all of those things, and all of those are beneficial to you. Not always the cash that you receive, but sometimes growing that relationship, building the strength of that relationship, so that you and that other person know that you can be relied on in those certain situations, and your roles and your goals, if you were to get into those. I think those are all very beneficial reasons on why you would want to jump into one of these, right?
Yeah, and I want to add something about that, guys. Like, some people might look at them, oh, you gave up, half of the profit. You should have been able to do something else. Maybe why don't you raise capital and all that? And they would be right. I could have done that. I could have scrambled and raised some capital and then took the deal down on my own. But at the same time, I'm thinking long term. I'm thinking this is a relationship that is already proven to be very fruitful and great for my business, because Mo is just an execution champ, and I love working with him. So I like getting people paid, and that sounds kind of weird. But you have to it has to be, these relationships have to be profitable for them to move at a really fast pace, or else people are going to just drag their feet, or it's like people are not going to want to work with you because you're nickel and diming them, and then you're trying to get everything, just all the meat off the bone, as they say, and leave nothing on there. So then think about the leverage that gives me with him, that I got him paid. I got him a deal that he made 65 grand, and not only that, I think I've already paid him another $30,000 in listing commissions as well. So this guy's making close to 100 grand with me. Don't you think if I need $20,000, he'll wire it to me tomorrow? like, because of that relationship. And you need those relationships to scale up your business, and you need to be a successful real estate investor. You need relationships like this that are that strong and cover a lot of different parts of the business. It's not like he's like one dimensional, like just he could only list a property for me. He could be a partner. He could give me his opinion on ARV. He can help project manage. I mean, so how valuable are relationships like that, you guys? You have to think long term.
Yeah, and like you said, the guy's just an absolute machine. It falls right in line with our only a player mentality. So
Yep.
I think again, it only strengthens those kind of relationships when you bring and continue to evolve those people into your business, right?
Yep.
So what we're going to do now, guys, is we're going to go ahead and pull up a screen share, and you should be able to see my screen shared here. So what we're looking at here is this is a copy of the joint venture agreement that Alex uses here in our business. And then I'm also going to go ahead and put into the chat here our Facebook group, and you can find this. I'm going to go ahead and switch my screen and show you guys on here real quick. You can, if you want to, go down and you can find on our Facebook page a copy of this agreement. You just go right here on the Facebook page, you go over to more and you hit files, and right down here in the files, Alex uploaded this JV agreement about a month or two ago, and we will load a copy of the profit split agreement that we're going to go over today as well. But you guys will have both of these available to you. Just go ahead and go online into the Facebook group. I'm posting that link right now. And together, we're going to go ahead and go over this agreement with Alex right now. So Alex, what is this joint venture agreement that we're looking at? What is this saying here?
It's breaking down the different terms. That's why there's bullet points or there's numbers here, right? Property we purchase under entity managed by the principal. Well, who's the principal? Alex Camacho, or typically go to say RFCO or LLC. But agent would be the deal finder. Principal would be the investor taking the deal down. If you look there, it says principal will fund, fix, and sell the property. So that's saying the role of me in the transaction. Net profit equals sales price minus purchase price minus realtor cost. So it's going into the formula that we're going to do. We're going to use to calculate our profits. So we're on the same page of how that's calculated. And then total.
And Alex, I like how you mentioned that. So you break down in the agreement how we're finding net profit. That way there's no confusion. Hey, is profit going to be paid before the realtor fees or after the realtor fees? It's clearly in here so that everybody knows, hey, when we say net profits, we are meaning the end value, right? And you can change terms in here if you want to. So if you do want to switch out those terms, you can do that.
Exactly. There's and then the other, if the agent does not make a real estate commission. So there's also a breakdown because we'll do on occasion joint ventures with agents, and if they're going to list a property and they're going to get paid a commission, we're trying to clarify there, like, hey, because in a perfect world, agent's going to want a full commission and they're going to want a part percentage of the deal. And I mean, we want to make sure that it's not lopsided, right? That there's very hey, and so it says like the first $15,000 we receive, and then after that we split it 50-50. Again, this is all like negotiable, but this is kind of the way I work it out. So then it's clear on how we're going to split the profits, how we're going to calculate the profits, and then how we're going to split the profits.
And it goes in further, to if the agent doesn't make a commission and what these are. And, Alex, you've mentioned that you can kind of change these terms out, right? That's why they're bullet points. That's why they're numbered. So if you wanted different terms or different points in the agreement, you can kind of shift those out as you need to and, put in whatever terms might make sense for you. So for example, Alex mentioned his Hawaii project. One of the terms on the Hawaii project was Alex would get paid out early before waiting until the end, a smaller portion of his chunk so that he can reinvest that back into the Hawaii business and continue to find that next deal so that him and that investor can work together and take down another project together. So I think that's really important to note, again, that you don't have to keep this agreement as it is online. When you find this on Facebook, guys, you can add in, you can change, and you can edit in these bullet points as you see fit. So Alex, we went over this agreement. Let's go over one other agreement with everybody. This is going to be the profit share agreement. So we're just going to kind of Again, go over this one now and look into what a profit participation agreement would look like. I'm going to zoom in again one more time here just so you guys can all see this nice and big. And Alex, what are we looking at here?
It's just a different verbiage. It's very similar, but it goes a little bit more in detail as to um, the verbiage of the calculation of the profit is different on this one. And then sometimes I'll use this one and I'll bullet point stuff after this. So I edit these documents, and you guys are welcome to do the same. So I wouldn't say there's that much.
Set up as a 50-50 split, but as you can see, it's calculated by subtracting the gross. Then we're going to document the cost. So this one might be a little bit more set up differently so that you're not maybe doing one with a real estate agent, but you're more doing an agreement with another partner, right?
Yep. It's just a different form. And then I've even done one where it's just a little bit more kind of bullet points, kind of similar to the first one. But it depends on the deal itself. And then sometimes I'll let my joint venture partner pick as well on which one they prefer.
Yeah, I love that. It's something where you can say, hey, if you guys want to, add or subtract any of these, bullet points, let us know. It's just like an offer. It's negotiable, right?
Yep.
I know we had a kind of set up here for a 50-50 split. What do you think are some of the common splits that you see most often when kind of doing joint venture agreements? I know you mentioned you'd take all the way as low down to 15%. Would you say it kind of ranges in that 10 to 90% range?
No, I would say it ranges typically from like 25% to 50% of, if you're the deal finder, right? It just kind of depends on the deal size and a couple of things like that. But also if you're bringing money to the table, maybe you're bringing the money to the table and then you're also bringing the deal. Well, then something like that, you possibly can negotiate an even bigger potential split of like say 60-70% of the entire equity, because you're bringing more than the deal itself to the table.
That's huge. And want to jump off topic here real quick, because we actually had a really good question come in from Carlos, and he's asking, what are some questions that you wish someone going into a JV agreement would ask more often? So I think what he's saying there is, if we're going to do a JV agreement, what are some questions that you would want to know before jumping into that agreement so that people could kind of, get an idea of that?
Well, I think the first one would be asked, like, what type of participation, passive or active, the partner with the money wants to have, because I've had some challenges there in the past, and I'm sure we're going to talk about that. What role do they want to have? Do they just want to bring the money and just cut the check, or are they going to have an active role in making decisions as well? Because if you don't get the roles and the goals and everything aligned at the beginning, these transactions can get a little bit messy, and then there could be overlap and there could be delays. And, you want to have a clear division of labor of like, hey, what are you doing? What am I doing? And so I think you need to ask that from the beginning, like, hey, this is, or just state that if you're you're the one structuring the deal, like, hey, this is what I want. This is, if you could bring this much money, I'm going to do this. I'm going to do X, Y, and Z. And then I need X, Y, and Z from you. Like, does that work?
I like that. Does that work? Like, hey, that's a great question. And the roles and goals, that's where you want to do that is, hey, do you expect me to handle this, or would you expect to handle this? And does that work with you? Because if it works with you, then, it probably is going to work with me. But if it doesn't work with you, best to kind of handle that beforehand so that we know, okay, well, who's going to sell this property afterwards? If you have the license and you're not going to sell it, who is? Yeah. What is it that you're bringing to the table?
And I think the communication frequency is also something you would want to ask questions about, like, how do you best communicate, or how, like, I don't need long emails. I fucking hate long emails, excuse my language. It's just the worst way for me to communicate. I'd rather jump on the phone, or we could do a text, or we could do a quick Zoom call to get it all hashed out. But I really love that about working with Mo, because he would like call me on any updates, and it was good, bad, the ugly. It wasn't even like always it wasn't good news all the time. Hey, we had this additional issue, it's going to cost us another $3,000. It's like, okay, what do you want me to do? It's like, no, I'm just keeping you updated. I'm like, all right, cool. Thank you. I mean, what do you want me to do? So we get that out the way as well. Like, how frequently you guys are going to communicate about the deal, because there's a lot at stake. So you need to make sure that you constantly like have a communication, a rhythm. Like, are you talking every week? Are you talking every couple of days, or just when needed? So like my equity partner, my joint venture partner in Maui, like I talk to him on WhatsApp like once a week. I mean, that's his communication. And if he has anything, he'll call me and I'll pick up and, we talk about it. But we don't really talk that frequently. We're working on one deal. We're negotiating with the tenants to relocate them. And there's really not much for us to talk about. Whereas with Paramount, I mean, there were so many moving parts and it was such a heavy rehab and there were so many difficulties with the city that, I mean, we had to talk more frequently, but it was just mainly just updates. And I mean, frankly, I was like, cool. I'm like in Maui or I'm some other, I'm in Oregon and then I'm getting updates and it's like, okay, I'm not really having to do the work, but I'm still making money. That's why I love these joint ventures because you can really split the profits, but also split the responsibilities and do a lot less. And then everybody does what they're good at.
Love that. Everybody does what they're good at. And, you always have that fallback, which is, are you okay with that? Does this sound good? So great tips there, Alex. And again, guys, we're going to make sure that you get a copy of the profit participation agreement in the Facebook group as well. The JV agreement's already in there. Alex, let's talk about that. Like, so what are some of the different responsibilities that you can split up in a JV deal?
Well, so there's acquisitions, right? There's deal finding. So that's like one, who's going to be responsible for finding the deals. And then there's the finance or funding, who's putting the hard money in their name or who's finding the private money, the project management, who's managing the construction of the project, tenant relations, if you're doing the property management or if you're, having to relocate tenants, if you're doing some type of hotel deal, right? Where you're just doing a quick flip or something. Or if you're doing a full flip, like who's going to sell the property and who's going to be in charge of that side of things. So, I mean, there's multiple areas that you can split. And if you have a profitable deal, like we did here with Paramount, I mean, everybody divides their time up. Okay, so I found the deal. And that's pretty much it on that one. Mo kind of ran with the rock and did everything else. No, I mean, I still had input on a bunch of stuff, but the project management. So we helped out a little bit with that too on our team. But yeah.
Cool, and I think again that gives you a good couple of different ideas there. And while we're on that subject, again, great question coming in from Lindsay. Lindsay is wondering, any recommendations, Alex, on how to JV on a multifamily house hack? So she'd be living in one unit and bringing in some of the money and, bringing in a private money partner for the JV agreement. This reminds me of almost what your old roommate does, right? What Micah does. So he's actually now been able to do this his second time successfully. I know he just picked up his second multifamily home down there, and that's how he's been able to scale up to, now 8 doors as a young 22, 23-year-old?
Yeah, he's 7 doors. So I'd say that's tricky because you are planning on keeping the property long term. So I'm not sure. I know with Michael, what he's doing is he's splitting the equity and splitting the cash flow with his partner. So if you're going to do that, then Lindsay, then you could potentially do a joint venture. They bring in all the money for the deal and you split the cash flow, you split the equity, and then you get to live in the property and maybe at a discounted rate, or you figure out what that ends up being, what you would have been paying, and figure those numbers out. I think that one's a little bit more complicated because you're living in the property, whereas all the other ones that we're talking about, nobody's living in the property that owns the property. It's an investment. So yeah.
And that's the thing you got to keep in mind, Lindsay, is are you planning on living in this for 1 year and then moving into a new multifamily house hack, and then you're going to recoup that cash flow, that rent is going to come back to be split between the partnership? But I agree, Alex. I think that's the big number there is what's the cash flow.
I would recommend against that on that type of scenario. Personally, I would say that would get too complicated in her scenario because she does have the money. So I would say to borrow some money as opposed to, why would you want to give up 50% of the equity, say, on that 50% of the cash flow when you only need to borrow maybe 20 grand? From what my numbers, for the numbers that I know about Lindsay, right? It's like she wants to do a house hack. She got 30, 40 grand. If she borrows, 20, 30 grand, she has enough to do that bigger, fourplex instead of the duplex. And then why would you give up half of the equity, half of the cash flow? Unless, that person brings all the money, then you keep that 30 and you're putting that to marketing and you start trying to find some, another multifamily deal, then that could make sense because then you're using that money that you have to find another bigger, better deal. And then that other person helps you take down that house hack. And then when you refinance later, you're all making a lot more money, but you didn't use any of your money. You just found the deal and you qualified for the loan. That could be a great structure.
And I think that's the big one, right? Is how do you structure it? What bullet points are going into this agreement? What are we putting in here? And are you good with that or not? I think that's the way to kind of fall back there. And again, guys, the questions coming in on the Q&A, great questions. We're going to go ahead and jump into Nathan's here next, Alex. And this is going right along on schedule is, how do you handle a JV agreement when things don't go as planned? Right. So what kind of happens when that happens in your JV agreement? What can you fall back on?
Well, that's why you need the agreements, because if your partner doesn't perform, then you can use the agreement to like enforce the arrangement. Like this is, hey, this is what your side is, this is what my side is, and that's why you don't want any ambiguity. But that's why I've had, the issues I've had with joint ventures have been, one was when one of my partners, it was a handshake agreement, somebody I knew for 10 plus years, and then we did the deal, but I knew that he was eventually going to probably want to keep the property. And so then we said, hey, we're 50-50 partners, whether we flip this or you keep it. If you keep it, then we're going to, evaluate what the as is value is, because we got such a great deal. And then you're going to give me a check for, half of that equity. And then when it came down to it, he disagreed as far as the equity of the property, because it was more convenient for him to say it was worth less, because he would have cut me less, money for my side of the equity. And so I wasn't really able to do anything. Like, he basically gave me 50,000 when he really owed me 75, and I lost $25,000 there. Now, if I had a joint agreement, then I could have, taken it to court. I could have put a lien on the property. I could have done something like that, but I didn't. And so I ended up losing $25,000, and I didn't end up doing any business with that joint venture partner anymore because of that situation. So I think, if you have your paperwork in order, and you trust people, but you want to trust but verify, have your paperwork in order, you could end up losing money if you don't do that. So make sure you have your LLC, or make sure you're on title, or make sure that you have a very clear, or everything, have a very clear joint venture agreement, so those things don't happen.
Huge. And I know Kevin asked a question as well. Kevin Crossan's asking, besides the contract, is there any other way to protect your interest in the JV agreement? And I think you mentioned a couple of them briefly there, in your explanation. It's recording a deed, some of those things against the property, right?
Yeah, you can record something against the property, but for me, it's just been more having the exact agreement, either DocuSign or notarized, and everybody's clear about that. And if something happens, then you can record that against the property.
Boom. So that's how you can kind of go about that, guys, and make sure that you are, protecting yourself in one of these types of agreements. Alex, I know that was a kind of handshake agreement that went wrong. Any type of wholesale, or not, I'm sorry, not wholesale, but JV agreements that you've maybe done in the past that went wrong, more for the operations side of things?
Yeah, well, I also did this joint venture with somebody I wanted to work with that was a multi-millionaire, and somebody that I respected, and we did the deal. But it was also, my mistake. I didn't have my LLC, and I didn't do. It was more of a handshake deal as well, because I knew this person for so long, and we had some issues with the tenants not getting out and us closing. Long story short, because I wasn't on title, he pretty much muscled me out of the deal. And it wasn't like a monster deal, but it was projected to make 40 to 60,000 profit. But he only ended up giving me $7,000, and he just kind of muscled me out because I didn't have anything to kind of back me up there, and it was unfortunate. But again, because of those two situations where I lost, in a sense there I lost like $20,000, and the other one I lost like 20. So across those two deals, I lost $40,000 of potential revenue or income or profit. I still made money, but that has never happened again. So even though it was a loss, I did learn a lot. And then it ended up helping out in the future on any deals, because I didn't give up on it. Because if something goes wrong in a JV agreement, I think it's easy for to just throw it out the window as like, hey, this is not going to work. I don't want to do this anymore. But I just recognized what I did wrong in those, and then didn't make those same mistakes when I went and do another deal like that.
Yeah, I think that's huge. It's you learned. You said, hey, this is something that happened in the past. I might have gotten burned on it. But I'm not going to let that happen again. So I think that's huge, and brings us to the next question, Alex, which is, how would somebody go about, presenting or bringing a deal to the table, for a JV agreement?
Well, I think the first thing that's most important is that your deal inside and out. Because if you don't know your deal and the investor or the potential money partner has questions, like you're going to look dumb not knowing your deal inside and out. And I know when I was in acquisitions, when I was working for my other investors, I got so good where, I mean, they asked me so many questions, but I had all the answers because I knew my deal inside and out. So I'd say that make sure you know your deal so that way you can present it and talk about the deal and have confidence. And it should have enough meat on the bone if you want to go 50-50. If someone brought me a deal and said, hey, this thing's like looking like they make 20 grand, like, I'm sorry, but I'm not going to do a joint venture on that deal. It has to have enough meat on the bone for you guys to both split. And in our market in Los Angeles, that's 50,000 typically. Like, I'm not going to bring someone a deal that I'm going to do a joint venture on if it's not going to make at least 50 grand, which, 25 grand. That's our minimum. It has to make sense because also, remember earlier, the roles and responsibilities, what are you going to do? What are they going to do? Doesn't make sense for everybody. And so you should already have some type of roles and goals in your mind and should be presenting that. For me, with one of the joint ventures that I did with my couple of my partners, what I've done is just I talk to people and then see what's going on, see what their goals are. And then you just find that alignment. You're like, oh, this person has extra money. Oh, this person has a full-time gig. So they don't really have the time to be managing projects or finding deals, but they have money. So you just start to identify who could be a good joint venture partner, and you start having those conversations early on, because as we've talked about in previous webinars, you guys, these deals move at a really fast pace. So your partner needs to be able to move at that same pace. And the only way they can do that is if you've built that trust, you've had that conversation with them. And then once the deal develops, you guys can move at a super fast pace to take that thing down if you guys decide to work together. Compared to be like, hey, I know we kind of briefly talked about this joint venture stuff. Hey, I got this deal. I need you to fund this thing this week. It's like, that might not happen because they're not ready, mentally, and they have to move some things around, especially if they got full-time gig and family and a bunch of other stuff. So I think I've done I've improved in that with having conversations with people in advance, knowing like, hey, I'm going to eventually get a deal. I want to work with this person long-term. Let me already start initiating all that. So that way the conversation has been started, they're prepped. And then when, that deal develops, they're ready to attack with me and not just like, they're not going to drag their feet. And then, it could ruin the deal for me. So that's kind of something I would definitely, talk about as well, to make sure that everybody has expectations, understands, that you're actively looking for deals and this could develop.
And we've discussed this before with private money lenders, right? When we talked about private money lenders, you want to make sure that person is vetted and ready to perform when that deal comes about, because it can happen so quickly. So if you wait until that last week, the couple of days before the deal, it's too late. You need to have already gone over some deals, gone over some potential numbers with somebody, so that when that deal presents itself, it's, hey, this is the numbers, this is what's available. Are you in or are you out? Like we have a finite amount of opportunity to take down this deal. So I think that's a really great way to kind of look at that, Alex. And, looking at your business personally, right? Like, what are some things that Alex Camacho would enter into a JV agreement with somebody for? Like what's on your
so
palette?
the first metric that I look for is if I'm going to put my cash into a deal, it needs to be the same cash on cash return that I would get on my own deals. And that's at least 25-30%. I mean, really 30%, because that's how much cash on cash on minimum we're getting on our deals. So if it's not going to hit that metric, then I'm probably not going to be interested. Or it needs to be something where like I'm learning something new, such as an ADU play, or a small development, or a multifamily development, or something like that I just don't have experience. So I'd rather, like I mentioned earlier, take a junior equity position, place in the deal, and then just learn from the other investor, and then you kind of go from there and then decide. I really think joint ventures, guys, are just like play by play, deal by deal basis. It's not something that's like, okay, every deal I do joint venture. It's just something that you need to consider, or I've found to be super valuable in my business, and that's why we're sharing it here on the webinar.
And again, these are opportunities for you to grow. Like you mentioned, you can either grow your wallet or you can grow your skills. So some of those things that you mentioned, like a ADU play, new development, ground up development, multifamily, luxury or custom built homes. Those are all things that, aren't your bread and butter business, but if you had the opportunity to learn and add those to your tool belt and make a little bit of money on it, it might make sense for you to jump in on. So I think that's a great way to kind of bring it full circle back to the beginning of why you would jump into one of these JV agreements is to learn and grow your wallet. And I think that's a good way to look at it on the back end of why, Mr. Camacho here on the call would look at doing that is same reason. He wants to grow his skills and grow his wallet just like the rest of you guys. So we do have another question coming in from Allison. She's just wondering how you would vet the private money partners. And we kind of talked about this last week or the week before with Indar, right? And it just comes down to your work, like what you've done in the past. I think Indar sends out a couple page pamphlet that just shows one of his projects, what it looked like before, what it looked like after, and what the money looked like that was made on it. And if you want to involve yourself in a deal that looks similar to that, you're probably going to get in touch with Indar, and that's how he kind of goes about vetting those partners. And then on the business side, once you get people to engage and show interest and say, hey, I want to be a private money lender, I want to be a money partner, that's what we just talked about, Allison, where you would want to then run them through a couple of sample deals and say, hey, look, this is a deal that I did in the past. This is what we made on this. If I offered you this opportunity, would you jump in? And then you as the investor know, okay, as soon as I get that opportunity, I'm going to Allison because she said she wants in on something just like this. And I have something, just like this, right?
Yeah, exactly. And you talk to those people and you let them know what you're working on. You kind of set the stage and say, hey, this is what I'm working on. This is what I'm going to do. Would you be interested? But you do got to vet them by finding out how. And part of the vetting process, what I do is I'll throw them a hot lead, usually within a week, of having that conversation. So if they say, yeah, I'm ready to potentially invest in a deal, well, I will test them by sending them an opportunity and see how fast they get back to me, what questions they have. All that is important because if someone wants to invest with you and then they're going to take a week, 2 weeks to get back to you, you have to maybe reconsider whether that person's ready to do a deal or not. Or set it clear, like, hey, this is the way the process is. I can't have you dragging your feet to get back to me. Like, it's a yes or no, whatever it is, I need to know.
Yeah, and you have to think about it on a fair level as well. Like, there's other people that are going to jump in on that deal if you don't want to. So if you don't want to perform, you probably shouldn't be reaching out in the first place there. So, Alex, what's a JV deal that's on the horizon that kind of has you fired up? Like, what's one that's currently in the pipeline? I know we talked about the past. We kind of got to talk about doing one with our guy Mo. But what's one that's coming up that you're really fired up for?
I'm really fired up about our Joshua Tree property. I think that property is going to do extremely well. We got that brought to us by Kayvon. He's been somebody that's been active in our community here. As part of the tribe. He helped us get our professional pictures done. Just a stud. And he brought us that deal, right? And we could tell it had a lot of spread. We tried to help him out to get a hard money loan on that. Unfortunately, the hard money loan was too hard for him to get, or the terms that he needed for the deal. And so naturally, he talked to you about it, and then you obviously were able to share with him the benefits of working with us, and then you brought that deal in, Will. So good job on that. But yeah, I'm excited because it's a bit of a hybrid where, I brought the property, we closed on it last week. Kayvon is going to keep the property as a rental, as an Airbnb rental, and then he's just going to, refinance, cash me out. And so it's a bit of a hybrid, but we set all of the terms up at the beginning because of the previous problems I had in the past. Remember, Will, we had those calls and we cleared the air because it is a real meaty deal. And we don't want it to be where he feels like he's giving us too much of the profit. And so we set a cap on how much profit we make. As long as we hit our 30% cash on cash up to a certain amount, we're good to go. So it should be a great deal on all sides. And we're starting construction on that on the 1st of June when the tenant moves out.
And that's obviously exciting, right? Because that's, again, like you mentioned, that's somebody who's a part of the tribe, is taking action. He's going out there, he's reaching out directly to sellers. He's literally been listening since day one on the webinar, has reached out, provided value back to us, as Alex mentioned, by, helping out with some professional pictures and things like that. And now, he's again, just come full circle and said, hey, Alex, I started touching base with sellers. I chose my market, I chose my criteria, I chose my methoding, for marketing, and now I'm starting to get some inbound seller leads. And this is now one that, like you said, it's a hybrid model where this guy's going to end up with a cash flowing short-term rental in, arguably one of the hottest short-term rental markets. And it's a deal that he probably wouldn't have been able to put together if it weren't for a JV agreement, right?
Exactly. That's what makes it so exciting. Win-win. I've been on the other side, been the deal provider, and now I'm starting to be the cash provider. So it's coming full circle. I'm excited to help this Kayvon grow and learn, and then make a profitable deal. And then he knows that this is long term. The seller is actually selling him the lot next door, seller finance with no money down as well. So he's thinking about building a new construction property there. I don't know. I doubt we'll do a joint venture on that unless we bring the right partners into the the mix. We'll see. But I mean, the deals are out there, guys. You just got to take action.
Love that. And again, Kayvon taking action, getting this deal, that's literally, how you do it is you take that action. You're either on the deal finding side or you're on the cash side. I think this, like you mentioned, Alex, is a win-win-win deal. Everybody involved, including the seller, is winning. And that's why these deals, that's why the abundance mindset really works out, right? There's no shortage of deals. If you get out and take that action and look at them, look at deals, analyze deals, see deals. When you see a deal, you'll know it. And when you need it, the cash will usually follow sometimes shortly after that. So with that, Alex, I think everybody on the call, from what I'm seeing in the chat, is super appreciative of the information that we were kind of diving into. What I'd like to do now is just kind of bring on everybody like we normally do here for the end of the meeting. And we'll kind of hang out and do a little chit chat here at the end and kind of talk questions with anybody if they have any.
Bye, but the tribe. What's up, my brothers and sisters? Oh, we got Alex Bar in the house, all the way from Maui, Hawaii. We got we got here.
It's incredible, man. I mean, there's too many familiar faces at this point to shout everybody out, right? It's literally these same faces that are coming back in here, our same tribe. It was great to get out and do a hike with some of you guys this weekend. I think what we learned from that, Alex, is that people enjoy getting outside and talking about deals, right?
Yeah, that was super fun, wasn't it?
Who else on the call got to come out and do that hike?
Oh man, that was so fun.
I know Eliam got to make it out. I know Lindsay got to make it out. A couple of people here in the chat got to kind of make it out. And obviously, again, I thought that hike was awesome because it was, as you mentioned, Alex, two most favorite things, right? Building health, building wealth. And we got to sit out there and really one-on-one learn a lot more about people who are part of the tribe, important members of the tribe, but really kind of learn how we can help them and they can kind of help our business as well, right?
Yep, exactly. I see.
So guys, anybody have
I see Rory's back. I know he's busy. What's up, Melissa? What's up, Nathan? What's up, Carlos, Amari, Ulysses? What's up, everybody? Anybody got any questions, concerns, any big wins?
Anybody got any small wins?
I have a question. What's up, Alex? What's up, Will?
What's up, man?
So I'm going to Indianapolis next week to hopefully pick up property over there. I just the other day was told by a private money person that they want to partner and they'll just throw 50 G's at me, which kind of throws me off because my plan was to burr. So this kind of the whole JV thing, how would you make a JV work if the original plan is to burr a deal for a buy and hold?
Well, I mean, you could structure it in a way that you're just going to pay them off once you refinance. Why would you not do that?
So just make them into a private money note holder and give them 8 to 10% or something like that.
Yeah, exactly. That to me, it's that makes more sense than to have them 50-50 on the deal.
Right, because for cash splitting the cash flow 50-50 would almost make it not make sense.
Yeah, and that's what I mean. It's one of those things that it just seems to make more sense if they just structure it more as debt.
Okay.
Yeah, you're good.
Cool.
Hey, so one thing on that, Nathan, I have good friends in Akron and Fort Wayne, Indiana. So if you need anything there, I can introduce you. But if they're not there, I don't know how much they can help you. Okay.
Yeah. All right. Yeah. No, I'm gonna be probably at least this trip strictly Indianapolis. I may check out some other spots later in a few months, but for now, that's where I'm gonna be. But I'll keep that in mind. Appreciate it.
Yeah, you got it, man.
I know Daniel Kong has an investment property out in Indianapolis. He shared a little bit about that with us.
Yeah. We've been talking. Daniel and I've been talking.
I was going to say Daniel's a great resource for Indianapolis. That dude is a really smart guy and does the out of state investing as well as in island burr investing. So dude is a great resource.
Yep. Oh, we got
Right
Warren in
on.
the house. We got all the Hawaii people. What's up, you guys? Man, I miss Hawaii, you guys, but I also love Mexico. So
You can see Alex is almost losing the tan, right?
stop it. Stop it. It's true. It's true.
It's wild. Usually when I'm on a call with Alex, I get at least 5 cockle-doodle-doos from the roosters. There's just, flocks of roosters that are out wild in the streets out there in Maui. And, now that Alex is down in Guadalajara, nothing's changed. There's still roosters cawing, but they're just a couple of different roosters, right?
There's more in Maui, dude.
So guys, I'm thinking about starting a chain in the Facebook group. I want to do a chain for weekly wins, where every week, if you have a small win, because a lot of times I think people get overwhelmed by the big nature of things, right? Like, oh, I didn't get a deal. I didn't get a property yet. I didn't get my burr yet. But a lot of times, if you take it back onto the small steps, right? Rome wasn't built in a day. It was built small step after small step after small step. So I want to start a weekly chain in the Facebook group where you guys, I'm going to even use it. Everybody on our team is going to use it, but we want everybody to be able to kind of share when they have a small win that could get somebody else in the tribe fired up. Whether that's sending out your first set of mailers, whether that's going and doing your first driving for dollars, whether it's hitting 25 houses on your driving for dollars and that's your personal best. Whether it was you set up a call with Daniel Kong because he's a legendary investor out there in Indianapolis and you wanted to meet up with him, or whether you set up a time to go grab a beer with me and Rory and go check out a property nearby, something. Put in those small wins. I know Rory, for example, this week just set off his first offer. So he's now sending off offers on flips. And he didn't get a deal yet, but he sent off his first offer. And that's the kind of stuff that gets other people freaking fired up, right? Because you're like, man, he sent off an offer. Okay, I can do this. And so what we're gonna do is we'll start that in the Facebook group, and it'll just be the weekly wins. And we just want to hear your small weekly wins, so that when you hit that weekly win, everybody else can know about it and get that same kind of fired up energy from it.
Now, I just got back from Iowa. I spent the last week in Iowa looking at opportunities out there. So we're looking at buying a 9-unit, hopefully here in the next month.
Serious. And what I noticed about Derek, man, is that he got involved in Ryan Dossey's mastermind. He was paying for this. He was constantly taking action. He was working a full-time job, making no excuses, constantly calling me out for all types of shit, but asking for help. But in a good way, right? Not but he was still always in my ear. What do you think about this? What about this? What about this? And so that's just an example, you guys, of how much you can change your life in a year and a half. I'm not saying it's for everybody's gonna do that, but if you take massive action, you get around the right people, and you keep on testing, you keep on pushing, seriously, you could really hit some home runs in a year and a half.
Hey, Derek, can you throw your Instagram in the chat?
He's not really that active there, but you could chat with him.
I'm not, but yeah, I will.
But man, Derek's waking up with that millionaire mindset, right?
Yeah.
Love that huge win. And again, guys, it doesn't just happen overnight. Like Alex said, it's not like, Derek woke up and did this. This was a year and a half of small wins built up that finally, erupted into a couple of mega deals, right?
Yep.
Anyone else have any?
You can find those deals.
Anything they need?
I just had a question on how you found the deals, the two.
Are you asking me?
Yeah, I think so.
Yeah, where'd you find it?
Yeah, I that was Mellors. I mailed the owner, built a really good rapport with them. It was about a 8-month turnaround from the time we first started talking till we locked them up.
Nice.
So it was just consistency and keeping up with him and keeping that rapport going.
Did you do a mailers all 8 months, or the mailers initiated conversation and then conversation carried 8 months later you got it done?
I sent the mailers and he called, and then it was 8 months of conversation after he received my mailers.
Got it. All right. Very cool. Congrats, man.
Thanks.
You guys heard it there. That's an 8-month nurturing time. That's 8 months of warming up that lead and getting that lead ready. So it's not instant gratification. But I don't know if you guys heard it. You know, Derek must be listening in on these webinars. Consistency. That's all he said right there. Is he said if you're just consistent with the next guy, you're going to get that next deal, right? Build the rapport, be consistent. That next deal's on your way.
And on that note, my offer still stands if anyone needs leads for cold calling. That's always on the table for anyone that's looking to cold call, needs home addresses, names, contacts, emails. Let me know. That offer is always on the table for you guys.
No excuses, right?
Cool.
Exactly.
We'll go ahead and catch everybody here on the next week. Look forward to catching everybody on the flip side. If you need anything between now and then, as always, feel free to connect with me or Alex via Instagram or shoot us a text. We're going to be doing some fun stuff next week and for the month of June. So you guys be expecting some of that. And we're definitely going to try and do another meetup here sometime with Alex while he's in town. So keep an eye out for that. Like you guys know, we usually announce that on the Facebook group when we do. So keep an eye out and we'll catch you guys on the flip side. All right.
Alex, make sure to eat some pitayas, man. You can't be out in Guadalajara and not taste them.
I got you, bro. I'll let you know how it goes.
All right, man.
See you guys.
See ya.
All right, guys.